Welcome Tuesday morning on the floor of the New York Stock Exchange, day 8 of the government shutdown. We are here to talk about this and to talk about the market reaction with our guest. That is Mark Otto, Managing Director for Streicher and Company. Mark, thank you so much for being with us.
Thanks for having me back.
So Mark, day 8 of the shutdown, the market tried to recuperate this morning and technically the S&P 500 is totally trying to resist. Tell me what the market is believing right now.
I think the market's been relatively resilient. All the information that's coming out, it's been trickling here and there. Most recently this morning, the Republicans are on speaking about it. It seems as though, each side is tossing stones at the other. I think most traders I speak to here on the floor of the exchange, though, believe that they'll reach some sort of agreement to raise the ceiling before the 17th.
Yeah, clearly the market is not believing that the government, United States of America can really default. And it's kind of clear from the reaction. Well, when do you think the market will really panic? When the market needs to know something from Washington? October 17th, we know, is the date where we're going to reach the debt ceiling. Do you think that will be the date that we don't know anything, the market will really react?
I think one thing that potentially you might see some reaction ahead of that, it could be if they get a warning from a creditor on the U.S. credit rating. That might come out before that. And just a warning that, hey, if you default, we're going to attack your credit rating. And everyone knows the consequences of that. Interest rates will skyrocket. So that'll be a big problem. But if that occurs prior to the 17th, we'll get a knee-jerk reaction certainly before then. But most traders I speak to down here, they believe it'll probably happen. The agreement to raise the debt ceiling will probably happen in the 11th hour right before the 17th.
Okay, we'll wait for that. In the meantime, we're going to have few indications this week. One from the Federal Reserve from the FOMC minutes, and then tonight we begin, the earnings season. So tell me about the FOMC meeting. By now, a lot of people are saying that probably the Federal Reserve will not do anything in October because the situation is pretty dire right now, and we don't have enough economic data.
Absolutely. I think that's a big question mark. I mean, last week, the miss on the non-farm payrolls not being there, that was like the biggest piece of information we were going to get for a couple of weeks. So going forward, I'm hearing and seeing more and more reports that there's discussions of QE3 not starting to unwind until the beginning of next year. So I think obviously everyone's thinking at the near-term hurdle is going to be what they do with the debt ceiling. More than likely, they're going to raise it the 17th, and then the next hurdle is going to be, what they're going to do about QE3. In between, you're right, Alcoa kicks off their earnings season tonight. Most people I've been speaking to about earnings are saying, we've seen this movie before. More than likely, they're predicting it's going to be ugly. They're gonna beat all their estimates. Generally speaking, revenues not so much, and then forward-looking guidance is probably going to be ugly again. So,
especially after the shutdown, it might impact a lot of companies, even in the private sector.
Absolutely, there's a potential for that, but most people believe that they're going to beat the estimates, which is the big thing. It's not going to be enough of a catalyst for earnings to matter and actually be a drag on things from here. So.
Now, Mark, technically I was saying that the S&P 500 managed to stay above 1670. Yesterday we tested that level again several times in the last several days. We are very close to that, so tell me about all the levels that you're monitoring right now.
Well, from here, 1675, and then 1682 and 1689. From there, you got to think psychologically at 1700. Yeah. Support from here, 1668, 1662.
Be a big deal if we reach 1662 and we go under that?
It definitely could have some more consequences and sort of paint a much more bearish outlook.
We'll see. Thank you very much, Mark, for being with us.
Thank you.
And thank you for watching.